Good evening, everyone. My name is Henry Gamble with SimplerOptions.com, and in today's free video I wanted to take a look at Facebook. Now, Facebook was one of the tickers that we looked at in last night in our premium video, and I had just essentially gone through this ticker with several different areas of support, various reasons why I was looking for it to bounce, and then that bounce has followed through for us today. Now that we've got the bounce, what can we do with it at these levels? That type of a question really depends on what time frame you're approaching it from, because when you look at this daily chart, it may be very easy to get excited and say, wow, we've got a fresh daily squeeze that's formed. I can see the results of what happened the last time we had a daily squeeze, and not only is the daily squeeze attractive, but then you also have a signal that may very well tie into a weekly chart, and this is what I'm looking for, or basically the signal that I'm looking for to take Facebook into new highs. That's all well and good, but what is one of the most important things that you can do as a trader in these situations, or at least one of the things that I find to be kind of helpful information, is to look here at your option chain. So if you followed yesterday's free video, we covered this concept in some detail, but it's basically based off the idea that as Facebook makes its ascent into this area, you'll notice that you have a huge chunk of open interest at the $80 calls. So the premise behind this is essentially that, when Facebook makes these big runs, that you have a lot of people coming in buying these thinking, great, Facebook's going to take off, the daily squeeze, all of this looks very good. But more often than not, what you're going to see is that prices will run up into those targets, run up into 80, and then pause there. They will spend the next couple of days trading just below those prices to allow the $80 calls in March expire worthless, and then we'll take off using the April series. So this is a good place to do something like a diagonal, where you are selling the front month, buying the further dated out contracts. You can also look to do it with the way that I'm going to do it, which is going to be the call debit spread, where I have purchased the 78s and sold the 80s. If we can then run up into 80, at that point I will sell the 80s and buy the 82s. This flips this into being a iron butterfly, and that's a very good way to play the pin if it comes to fruition. If it explodes in one direction, well, of course my risk is defined. Another great way to play this would be through a bullish call butterfly, and you can look at this and think, okay, is the trade too late for me to put on? Well, I don't think it is, but I always come to my pricing to check first. So on the butterfly, if we were to configure it $3 wide, what I like to see is that you can pay about 1/3 of the max profit of the spread. In this case, it's a little pricier. Being $3 wide, I'd like to pay somewhere down in $1.33 for it, and I think that just makes it a little easier to actually get a profit out of it. But those are a couple of ways you can think about playing it. So really like the daily squeeze. We'll really be paying a lot of attention to synthetic resistance at 80. Once we get past that, I think Facebook will have a chance to run. So I hope you guys find that analysis helpful. If you'd like to see us put these strategies in practice in real time, we are having an open house that will be starting tomorrow. So here's kind of just a brief synopsis of what we're going to be looking at. You've got myself, Tony Laporta, Don Kaufman, Carolyn, a huge lineup of what I have come to find of really great room moderators. I love being in there. We're going to be focused on expiration style trading on Wednesday and Thursday. You've got the Fed announcement, which, no doubt that won't be dull, and it should be a great couple of days of trading. So if you guys are interested, I hope to see you there. Otherwise, we'll touch base at the next free video.